Hello, this is Jordan, and this is your precious metals market update. This is being recorded on the afternoon of Wednesday, August 5th, 2015. And we've been expecting a rebound in the precious metals sector. Gold has been locked in this 1080 to 1100 range. The miners have been extremely oversold, and based on that and based on the support at gold 1080, we've been looking for a rebound. It has not materialized yet, and given that and given what happened today, it looks like there's higher odds of another scenario playing out, which would be gold breaks below 1080. And today I'm not showing the gold miners, but usually the miners lead the metals, and the miners today, looking at the HUI, GDX, I mean, across the board, they've all closed at, I believe, new lows for this move. GDXJ has been the strongest, and even after today, it looks like it's breaking down and looks like it's going to test its low, which is another 3% lower. So, given what's going on in the miners, that does not bode well for gold. And gold today closed at, if you're just looking at the daily closing price, it closed at 1084, which I believe is the lowest close for this bear market. It still has not closed below 1080, but what we're seeing now is there is an increasing risk of gold breaking below 1080, and that would bring about another sharp move lower. And so we're taking a very big picture view here. This is a weekly line chart of gold going back to 1970. And at the top we show two oscillators. We show the rate of change based on 10 weeks, and then the 10-week, or gold's distance from its 10-week exponential moving average. And we can see that looking at those two indicators, based on kind of a short-term, near-term view, gold is not that oversold. Looking at, for example, if you look at the 10-week ROC, that's at about minus 9%. That has to get close to minus 20% based on history to be extremely oversold. And as far as the other indicator, it has to get close to minus 10%. It's about minus 4.5 right now. That doesn't mean that gold has to go down to those marks, but based on where it is right now, it doesn't look like it's that oversold. Now, in the context of the bear market, it's obviously the second or third worst bear market that's been long. It's severe. It's over 40%. So, I mean, based on that context, we know that gold is very, very oversold, but we're kind of zooming in here on the short term. And even also, if you look at 50 weeks instead of 10 weeks, it's a similar picture where it doesn't look that oversold. So based on that, and based on the fact that gold might break 1080, it's very possible it could fall. If it does that, it's very possible it could fall all the way down to 1,000. So we need to focus on. A lot of people have talked about 1040 as support, so I would say 1,000 to 1040 as support. But if that does happen and we see another major breakdown and really a crash move towards 1,000, it's very possible that the bear market could end this month if that's the case. I mean, we were thinking that gold would have a short-term low at 1080 and bounce back into 1130 or 1140. That's still possible, but the chances of the other scenario playing out where we get this crash low down to 1,000 in the next couple weeks, I mean, the chances of that, it looks like, are higher now than they were a week or two ago. So we have to keep all these scenarios in mind. Last point on this chart, I've said this in past videos, but gold, $1,000 around that point is just very, very strong support for gold. So, I mean, I know there's people looking at 900. I mean, we've even heard calls for 800 or 850. It's just, I don't see that happening. I mean, I think the bottom is going to be around 1,000, might be a little bit below. But in any scenario, 1,000 is very, very strong support, and it takes a lot of time to break below support. And if you go back to 2008 to early 2010, gold spent 2 years trading around $1,000. I mean, for most of the time, gold was resistance and it traded below it. Then in I believe it was October 2009, gold finally broke out past 1,000, made a new all-time high. Then in early 2010, it successfully retested 1,000, and then it had obviously a great move after that. But so the point is, gold spent 2 years trading around 1,000. It's a very significant level. It's going to, I mean, I think it's probably going to mark the end of the bear market, and so that's really, in my opinion, the target that we need to focus on, not the stuff that's a lot lower. Again, I did say if gold's going to go to 850 or 750 or whatever, I think it would have to have a huge rally first to 1500, and then it would have another move down to those levels. I mean, in that case, it's in a secular bear market. So anyway, not to get too far off track, but that's how I see it. And let's talk a little bit about sentiment. This chart, we show the put-call ratio for GLD. We're looking at all the options traded on all the options exchanges in the world. So below, we're looking at the put-call ratio for GLD, and we smooth the data with a 20-day moving average. And I've marked on here the points where the 20-day moving average of the put call has marked a low, and it's been about around 1.1 there at the end of 2013, and then at that November 2014 low, the put call ratio was close to about 1.2. So 1.1 to 1.2. Right now we're at 1.03. So you can see that there's more skepticism in this market. I wouldn't say sentiment based on this indicator is at a full-blown extreme, but it's definitely getting very, very close to it. Again, you know, look, let's put all things together. Gold's at 1084. If gold breaks below 1080, we're going to see more people bet on gold going to 1,000, and then you'd probably see a spike in this ratio. Now, the other thing I want to mention, we don't have a chart, but looking at the net speculative position in gold, and so what we do is we look at the COT and we look at all the non-commercial positions, and then we divide it by open interest. So we do that because we can get a real consistent view over the last 15, 20 years. And the last reading that we had, it was about 3.4%. Now, the last video I did, I said that we were at the second lowest level in about 14 years. The last reading of 3.4%, which is only about 15,000 contracts, that is at a 14-year low. But again, looking at the technicals, that doesn't mean that gold's going to immediately rally here around 1080. It's possible. I mean, again, there's the speculators are net long 15,000 contracts. It's possible that speculators could become net short and commercials could be net long. In fact, I would say I think that's going to happen before this bear market ends. So sentiment is coming more to an extreme. I mean, obviously, in the big picture, it is at an extreme, but looking at this indicator, looking at the COT, it doesn't tell us. I mean, they have a little bit more room to go, and that could coincide with gold breaking below 1080. So just keep that in mind. I mean, this is the last chart I have, and again, we're just looking at probabilities here, but gold is locked in that 1080 to 1100 range. It has to close above 1100 if it's going to have that rally to 1140-ish. Or if it closes below 1080, then we really need to get ready because it could have another crash move lower in the next week or two. But if it gets down to 1,000 this month, it's possible that that could mark the end of the bear market. So some really exciting stuff is happening in this market. It's really uncertain over the next couple days. Things could get quite exciting. That's all I have for today. Thank you so much for listening and watching. You can follow more on my work at thedailygold.com. You can email me, jordan@thedailygold.com. Also, you can sign up for my free newsletter. Just visit jordan@thedailygold.com. That's all for now. Again, thanks for listening and watching, and I wish you all the best.